Link with your team members. This is fully for activated members. Let them join for them to learn because this is the basics of the business. This is where they can understand the knowledge of trading on the futures markets. So don't exempt your team members or downlines from joining this session. All right. So whilst we're about to start, invite them as soon as possible so that we can all start together. Mostly those who refuse to join, they would rather join the other meetings and then be asking questions that they are not supposed to ask. Hmm? So this meeting will guide such people to understand the concept of trading on the futures market. And once they understand the basics, that is when all the other meetings with regards to the strategy and everything that we'll be learning will be so complex or will be so easy for them to understand, right? So please do that. All right. So before we start, let me do this exercise. Let me know where you are joining from. Let me know where you are joining from before we start. Let me know where you are joining from, your name and where you are joining from. So drop that in the chat. Let me know where you are joining from. Before we start, let me know where you are joining from. Let me know where you are joining from. All right, so we have Musa from Gambia. We have Emmanuel from Ghana. Okay. We also have Eric from Rwanda. Okay. So Prosper from Ghana, Isaac from Ghana, Simple from Sudan, Samuel from Kenya, Crypto Trader from Kenya, Evans from Congo. Okay, so Missy Prime from Nigeria. That is good. Portia from Ghana, Barry in what? Nigeria. Okay. So we have Jenna from Italy. Wow. Then Justin from Uganda. Interesting. Okay, so Rooney from where? UAE. Wow, wow, wow. Okay, so we also have Joseph from Uganda, Alexander from Uganda, Chadwick from Kenya. Okay, so Pafra from where? From Uganda. Okay, wow, wow. All right, so Silva, that is where Joda Silva from Lagos, Nigeria. Kate from Nigeria. We also have Jonathan from Uganda, Joseph from Tanzania. So join and let us know where you are also joining from. Let us know where you are also joining from. Let us know where you are also joining from. So Rahel from Kenya, and then Louise from Uganda, Owen from Uganda, Chucks from where? From Nigeria, and then also Jack too from Tanzania, Tina from Italy, Alfred from Ghana. Wow, wow. Okay, so Francis from Kenya, and then iPhone, your name. Okay, so Uganda, and then Collins from Uganda, Ben City from Nigeria. Wow, that is so interesting, ladies and gentlemen. So the next person, let me see. Okay, so we also have Ben City from Nigeria, and then Chuck from Nigeria. Okay, so Osai from Ghana. Then Atiodi from where? From the United States of Nigeria. Okay, so USN, right? That is good. Okay, so we have Joker from Rwanda. That is Rwanda. John from Uganda. Okay, so ladies and gentlemen, I think that is good, and I welcome you all to this wonderful presentation. This is where we are going to learn more about futures trading, how you can understand the concept of trading on the futures markets. Okay, so Frank from Ghana. Wow. Okay, so without wasting my time, let me use this opportunity to share my screen for us to start. Let me use this opportunity to share my screen for us to start. Okay, so um, mm, okay. All right, my screen is visible, right? My screen is visible. Can you see my screen? Can you see my screen now? Okay, so if you can see my screen, give me one in the chat. If you can see my screen, give me one in the chat. Okay, very good. So, all right. No, let me change and then use. You should see my screen. Okay, let me share it using. All right. So now we can start. Now, before we start, we are trading on the futures market, both the spot market and on the futures market. This lesson is particularly going to emphasize on advancing the knowledge of the futures market, how to trade on the futures market, and how the futures market works. For some days now, I've seen some people, and I want to address this little issue before we proceed. Now, before then, now we've seen the waves in the market. We've seen the waves in the market, and so far, the market is being influenced by a normal circumstance. We are supposed to observe an uptrend, but due to Israel and then the Iran war, now we are seeing the market is not being stable enough. So this is something that I would like to give you a brief information about that. That be cautious of how you trade. Okay, be cautious of how you trade because the market is unstable. If there is a ceasefire in the war, surely there will be an uptrend. But then, so far as the market continues, we are going to still experience the waves in the market following on a downtrend for some time. So let's anticipate to see what happens. All right, so that's just by the way. Now, trading on the futures market is quite different from trading on the spot market, and this is something that every trader needs to understand very clearly. Trading on the futures market is quite different from trading on the spot market. And this is something that every trader needs to understand, right? So I'm taking this from the scratch, expand every aspect of the lesson, every concept that you need to know and understand how it works and how you can apply them in the trading skills for you to make the necessary profit that you need to make. Huh? Now, the reason why this meeting is being called, these lessons are being conducted, is for you to learn and understand and follow the principles of the learning for you to be able to apply them. One thing that I've realized is a lot of people do their own things despite the fact they follow the lesson to learn. They go by doing their own things, and after they backfired, they come in blaming leaders. Now, listen, the futures market is not like the spot market that you can choose to make things by your own decisions. You can choose to work things on your own. You need to follow the principles. Once you fail to follow the principles, it will backfire. Hmm? So, I'm not going to scare you in this lesson. I'm going to teach you, give you the confidence, and also ensure you for you to also be assured that you need to also be principled. You need to follow the guidelines. You need to follow the rules in which you have to apply them to make the necessary profit that you need to make. Now, so we said trading on the futures markets. Okay. So we said when we talk of trading on the futures market, the futures market is a market based on contracts. The futures market is a market based on contracts. So a trader trade on the futures market based on an assumed contract on the market. And what does that contract mean? And what is the implication of the contract? A trader decide to follow a particular trend of the market. Either he decides to go on an uptrend to make profit or downtrend to make profit. Now, we all know when it comes to the market, every market follows three rules or three different trends. We have two major trends in the market. That is an uptrend and then a downtrend market. And then the last one is a ranging market. But basically, the market follow these two rules. That is either the market going on an uptrend or a downtrend, a downtrend. So whenever a trader joins the futures market, the trader make up his mind to get one of this trend of this market to take advantage and then make profit. So in this case, when a trader is signing up a contract or the contract that works on the futures market, it's either the trader is going to follow one of the trend to make profit by either shorting the market or longing the market. So the trader goes on a long position or a short position. Now I'm taking it step by step. So a trader decides to go on a long position or a short position. So if you're a trader in the futures market, your contract is based on one, the position of the market. Either you are predicting to go on long or to go on short. Now, after this decision has been made fixed, the next thing that the trader sees in the market is what we call leverage. The next thing the trader sees in the market is what we call leverage. Now, what is the work of this leverage and what does this leverage do? Pay attention and listen to this. Because the trader goes into the market for a contract, he is given an opportunity to leverage on his capital to be able to make fast profits in the market. So when it comes to using leverage in the futures market, the work of the leverage helps amplify or expose little capital or less capital. Expose less capital to make fast profits. The trader is able to expose less capital to make fast profits in the market. Now, when we say a trader is exposing less capital to make fast profits in the market, what does it mean? In the futures market, unlike the spot market, on where the trader owns the assets. So if the price is supposed to move, anytime the price move, it goes according to your capital on the spot market. When it comes to the futures market, before the trader will be able to make profits in the futures market, he needs to amplify his capital. That is by exposing more or using less capital and then exposing it with leverage. So whenever a trader exposes an amount of money to the market, it helps the trader to be able to make fast profits in the market. Right? So when it comes to using leverage in the futures market, the trader goes for a simple leverage to be able to expose more capital into the market to make more or fast profits, to make fast profits in the futures market. So you may see leverage like 1x, 2x, 3x, 4x, up to 20x and beyond. Now, what does this 1x, 2x, 3x mean in the market? So pay attention and listen. So when I go for a leverage of 1x or 2x or 3x, so let's assume 10x in the market. It simply means that if I have $5, it simply means that I'm assuming to use this $5 to expose more than this $5 to the market. That is 10 of my leverage times my 5, which is going to give me 50. which is going to give me 50. This simply means that with my leverage, I'm exposing more strength to the market by using 50 as my position size or position amount. Hmm? That is the idea. So anytime I go for a leverage in the market, that is what it means. Now, the next thing that I'm also going to realize in the futures market is what we call margin. It's what we call margin. Now, what does the margin mean and how does it work? What does the margin mean and how does it work? So, when we talk of margin, when we talk of margin, pay attention. Margin is my collateral money in the market, or I also use the word original money in the market. So, when we say the margin is the collateral money, it is the money that the trader has assigned to bargain to make profits or to make fast profits in the market. Hmm? It is the amount of money the trader has assigned to bargain to make um high fast profits in the market. This means if I want to make fast profits, it's also going to depend on my margin. So I use a leverage and I expect to make profits right with what? With my margin. Now, the next thing that I'm going to introduce as a term in the market. So you've seen collateral. How does the collateral work? Let me explain that before I proceed. How does the collateral work? So just like how the banks work, when talk of the collateral, you go for a leverage, okay? And when the price moves in favor of you, price movement. So anytime the price move in favor of the trader, because of the leverage, you'll be able to hit fast profit or you'll be able to hit profit very fast because you've amplified this leverage or you've amplified your capital using a leverage. And because you've amplified your capital using the leverage, a little price movement, anytime the market moves very fast in your favor, you'll be able to come out of the market very fast. And anytime the market goes against you, against your favor, it also triggers against you. Hmm? This means that if the trader will be able to make profit very fast or the trader will be able to lose money very fast, it's going to depend on your margin and then your leverage. It's going to depend on your margin and your leverage, and then also the price movement. The price movement. So let me take time and explain these three terms vividly for you to know and understand. For you to know vividly and then what? Understand. Now, let me know if I'm not alone on this platform. Are you following? If you're following, give me one in the chat. If you're following, give me one in the chat.
You have no volume. So I stole your host powers. Let me return them. You had no volume. You had muted yourself.
All right, can you hear me now?
You are now back. By the minute you had muted yourself.
Oh, sorry. So all this while I was talking to myself. Sorry,
Sure.
guys. Okay.
Maybe you create some co-hosts to back you up in case you
All
mute.
right. So
Then you
let
can.
me do that. Let me do this. Mm, okay. So Ambassador Saul, you are my co-host. Okay. So whenever I'm out, alert me. Okay. All right. Let's proceed. All right. Is my screen visible now? Okay. Let's proceed then. Let's proceed. Okay. So now what we are saying is that the profit making, the losses, and the profit making in the market depends on these three factors in the futures market. Pay attention. Depends on these three factors. One is your leverage, two, your margin, and then also three, the price movement. One, your leverage, two, the margin, and then three, the price movement. So pay attention to this, get to know more. So the price movement. Now, what we are saying is that for a trader to make profits, it depends on the price movement. And for a trader to lose, it also depends on the price movement. Now, the trader will make profits very fast or very low based on the increment in the leverage. Pay attention. So when the price move in favor of the trader and then the leverage is high, the trader will be able to make profits fast. Listen, when the price move very fast and the leverage is high, the trader will be able to make profit very fast. When the leverage is low and the price moves based on the leverage, that is how the price, if the price move very fast and the leverage is standard, profit will be make, but not as fast as how high the leverage is. So the main work of the leverage is to amplify your trade to be able to make fast profits and vice versa. Pay attention and listen to this very well. Hmm? So if the trader wants to make profits, first, if the price is moving very fast in the market, when you talk of the price movement, that is the difference is between where you bought the assets and how fast the price is able to rise or drop. Hmm? So if you are on long, the price would have to rise in favor, and then also if you're on short, the price would have to drop in favor of your setup before you will see that the price is moving against or in favor of you or against you, right? Now, once the price moves in favor of the trader, based on the leverage, the trader will be able to come out of the market with profit. The next thing is that once the price moves in favor of the trader is going to make profit based on how the margin is conditioned in the market. And in same manner too, let's assume the price moves in favor of the trader 1%. Hmm? The trader will be able to call for a profit based on what? The leverage and then the margin used. In same manner too, when the price moves against the trader, pay attention and listen to this. The same manner too, when the price moves against the trader in 1%, it's also going to affect you it's also going to affect your margin based on your leverage. This simply means that when it comes to profit making does not only come from the leverage, but your margin and your leverage, as well as the price movements. This is one thing that every trader is supposed to understand. So mostly, I see a lot of traders who start up a trade, be like, and I make profits. I see that I make profits on my margin. Wait, hold on. You don't understand. Hmm? So profit making factors does not only comes from the margin as the money you used, but how the price moved, and then also the leverage you are using as well as your margin. That is the reason why, in the same manner, when you are losing, it's not because you have this margin alone, but it's because you've used high leverage. It's because the price is moving against you very high because of your leverage. This means that listen, this means that pay attention and listen to this. This means that when it comes to profit making and then also losses in the market, this means that, let's assume someone with um 10 leverage, someone with 2x or 2 leverage, okay, with the capital, the two of them are using a capital of te- let me use $100, okay, and then they take profit of 2%, or let me use 1%. They take profit of 1%, okay. Now, tell me, between these two, when the price moves in favor of them, between these two, who will come out of the market very fast? Use the leverage to tell me. Between these two, would the person using the 10 leverage or the 2 leverage? Between these two people, who will come out of the market very fast? Between these two people, who will come out of the market very between these two people, between these two markets very fast? Someone is saying my volume. Okay, very good. All right, very good, very good, very good. Yes, so someone is saying it depends on the price movement. Okay, all right. Now listen, we said the market move in favor of them. Okay, this simply means that the market is moving equally. But then the person with the 10x leverage will come out of the market very fast as compared to the person with the 2x leverage, because of how they've exposed, even though it's the same capital, but the exposure is different. Huh? The exposure is different. So how this person has exposed the capital to the market is different from how that the other person has exposed the capital to the market. Huh? That is the reason why whenever I see traders complaining that no, the profit that I'm making, it seems it does not tally with the leverage, then I'll be looking at you. I say, no, you don't understand. You don't understand. Hmm? You don't understand. Even though they are all using the same capital to trade, but one will definitely come out of the market before the other because of the exposure, the leverage used. This should tell you that the work of the leverage is to bring or is to help the trader to make fast gains or fast profits in the market. Mm? And in same manner too, when they are to lose to this person with the 10x leverage, when the market is to hit against them, the person with the 10x leverage would even get out of the market when it comes to losses, whereas the person with 2x leverage will be in the market because of the leverage. That is the reason why we are saying that when it comes to profit making in the futures markets, it is not just the leverage. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the margin. It is not just about the leverage, but the mar It is about one. These three things is what you need to know. One, the leverage used. Two, the margin. And then also three, price movements. Price movements. That is the reason why sometimes you set up a trade. I don't know if you've experienced this. You set up a trade and then you realize that despite your 1% profit, you make like maybe 5% or 3%. Have you ever experienced that? Have you ever experienced that you set up a trade of 1%, yet you made a profit of 3% or 5%? Have you ever experienced that? Have you ever experienced that? Have you ever experienced that? Hmm? Very good. Very good. Very good. You see, the reason why you experience that result is because of the price movement. Is because of the what? Of the price movement. You made that huge profit because of how high the price is able to do what? Able to move in favor of you. And once the price is able to move very high in favor of the trader, because of your amplified leverage or because of your leverage, now you will be able to do what? Make your fast profits in the market. You'll be able to come out of the market very fast. Now, in the same manner, too, we said when the trader uses that high leverage, thinking that the high leverage would help him to make more profits, when the market moves against the trader in a little move against you would also cause a new term that you need to know is what? Liquidation. So when you use high leverage, when you use high leverage, a little move or less move against you would also cause what we called liquidation. Liquidation. Now, this is what you need to do. I'm going to take time to explain what we mean by liquidation and why you need to understand liquidation and why you need to be cautious whenever you are trading. Now, so we said a little price move against the trader based on high leverage will cause what we call liquidation. Now, when we talk of liquidation, liquidation happens. Liquidation happens when the market goes against the trader and then eats up and make equal price with what? With your exit amount. So once the market gets equal to your exit price, now you need to be liquidated. So before liquidation will happen, listen, before liquidation will happen, it simply means that now your liquidation price has been triggered. Your liquidation price has been triggered. So liquidation just don't happen because the market is going against you. No. Liquidation just don't happen because the market is going against you. Liquidation happens because the market has triggered your liquidation price. The market has triggered your liquidation price. So when it comes to Royal Kill, anytime you set up a trade, you observe your liquidation price. You see your liquidation price. Even though not all instances, but I'm going to teach you how you can also calculate to know your liquidation price. Hmm? So now, before liquidation will happen, it's not because the market is going against you. Liquidation doesn't happen because the market is going against the trader. Instead, liquidation happens because your liquidation price has been triggered. Hmm? Your liquidation price. So when we talk of liquidation price, so you need to understand the difference between the liquidation and the liquidation price. Liquidation happens when your liquidation price is triggered in the market. So let's assume you set up a trade on short, of which I'm going to give you a practical example here. Let's assume you set up a trade on short position. Okay. Now, on your short position that you've set up the trade, you are on an asset, let's say Solana 150. Okay, on short. This simply means that when Solana rise, the market is going against you. This simply means whenever Solana rise in value, the market is going against you, the trader. Now, I'm taking my time to do this. So if I'm running with the lesson, let me know. Am I going fast? Am I going fast? Am I going fast? I'm taking my time for you to understand. Someone is saying no sound. Can you hear me loud and clear? Can you hear me loud and clear? All right. So you see, when you join and you have network issue or something, please check it out before you confuse us here. Eh? I'm very loud and clear. I'm very, very audible. Eh? They cannot hear me. So if you can't hear me, check your network. Okay. If you can't hear me, check your network. Very good. Very good. Now, let's proceed. Let's proceed. So what we are saying is that let's assume the trader set up a trade on short position. Short. Now you understand the meaning of short, right? So you set up a trade on the short position on Solana on a price of what? 150. This simply means that when Solana drops from 150 below, you are going to make profit. That is when the price moves in favor of you. In the same manner, when Solana begins to rise, the market is going against you. Now, when the market is going against, that does not mean that you are losing. When the market is going against you, that does not mean that you are losing. Always there is price reversal. Hmm? Now, listen. Now the market is rising. So there is a particular price that the market says that, okay, once the price rise to this point of, let's say, 200, you will be liquidated. So the trader will be liquidated when this liquidation price gets triggered. So once the market rise and rise and rise up to 200, that is when this trader will be out of the market. So sometimes some people set up a trade, they see the market going against them. I'm going to be liquidated. I'm afraid. I'm afraid of liquidation. I'm afraid of. You don't know. Take your time. Take your time. Huh? Once you understand what we mean by liquidation price, you have the capacity, you have the audacity, you have the authority, and everything to go into the market with full vigor to make your profits. Huh? So you check your liquidation price. You check your liquidation price. Now you know you have a trade of short 150. The market has risen to, let's say, 180. Now it dropped back to 140. You are making profit. So have you understand the meaning of liquidation? So liquidation happens when your liquidation price is triggered. Hmm? Liquidation happens when your liquidation price is what? Is triggered. So once your liquidation price is triggered, now we say that, okay, you no longer stay in the market. Give us our money. Let's use our money to settle the collateral that you came for. So that is when a trader is being liquidated. If you've understood liquidation, give me one in the chat. If you've understood liquidation, give me one in the chat. If you've understood liquidation, give me one in the chat. If you've understood liquidation, give me one in the chat. If you've understood liquidation, give me one in the chat. If you've understood the meaning of liquidation, give me one in the chat. Very good. Very good. Very good. Now let's proceed. Let's proceed. Let's proceed. Now listen. Liquidation is real on the futures market. Okay? Liquidation is real on the futures market. And you need to know and understand the reason why liquidation will surely be real on the futures market. The leverage is sacrificing or risking their money, or the exchange is risking their money for you. That is the reason why we said it is a contract. That is the reason why we said the futures market is a what? It's a contract. So there is no way liquidation would never happen. Listen, there is no way liquidation would ever be stopped on the futures market. But there is a way you can control and prevent yourself from entering into liquidation. Hmm? Listen, there is no way liquidation would ever stop in the futures market. But there is a way you can control yourself, or you can control by preventing yourself into ending into what? Liquidation. Hmm? There is a way you can control your trade and apply risk management by not ending into what? Liquidation. That is what you need to know. When it comes to trading, it's not about avoiding risk, but it's about what? Managing risk. When it comes to trading, so far as trading is concerned, irrespective of the market, it's not about avoiding risk, but it's about managing risk. So type in the chat box managing risk. Type chat box managing risk. Type in the chat box managing risk. Type in the chat box managing risk. So type in the chat box managing risk and let's proceed. Managing risk. Managing risk. Huh? So it's not about avoiding risk, but managing what? Managing risk. So type in the chat box managing risk. Very good. Very good. Now let's proceed. How can a trader manage risk in the futures market using Royal Q? How can a trader manage risk in the futures market using Royal Q? How can a trader manage risk in the futures market using Royal Q? Now listen. There is something unique about using Royal Q to trade on the futures market where manual traders can never get. Now, there are always two forms of traders in the market. Huh? There are always two forms of traders in the market. That is one, smart traders, and then also retail traders. Smart traders and then retail traders. Now, when we talk of smart traders have special strategies. Smart traders have special strategies that they use to make money. And mostly they come in the form of institutions. And retail traders are the normal people with no strategy, but yet finding to make money in the market. So mostly what retail traders do, listen, what retail traders do is to apply what we call, pay attention to this, because I see people coming to my DM to ask me this, is to apply what we call stop loss. Listen, the work of a stop loss for retail traders is for them to be able to maintain their capital in the market and make profits. The work of a smart trader is to overcome the stop loss. So whilst retail trader is in the market thinking of how he can use a stop loss to make profits, the smart trader thinks of how he can break down the stop loss to make profits. So when it comes to trading on the futures market, this is the idea. The idea game is between the smart trader and then the stop loss or the retail trader. Listen, the idea game is between the smart trader and then the retail trader. So this is as a retail trader. This is a stop loss. The whole space has been given to the smart trader. Now, below every stop loss, there is a liquidity. Below every stop loss, there is always liquidity. Because once they exit you out of the market with your stop loss, money will begin to flow in the market. They will use your money as a liquidity. Listen to this. Once your stop loss is triggered, now they will use your money as what? As liquidity. This means that if you can always fall below the stop loss, you'll be making profit. This means if you can be falling below the stop loss, you always be making profits, because now the stop loss has been used as liquidity and money is flowing in the market to the particular direction of the market. So what smart traders do is that they apply what we call DCA, of which you are so familiar with this, but you don't take it serious. They apply what we call DCA in the market. That's dollar cost averaging. So what smart traders do is that instead of smart traders thinking of how instead of retail traders going to the market with all their $100, smart traders will think of how they can be dividing their market into different portions to break down the stop loss. To break down the stop loss. Huh? So there are some of you, you are so greedy that we set up a trade, you ignore everything. You don't check out anything in the market. Listen, now you are trading on the futures market. The futures market is an advanced market. If you know you can't trade on the futures market, go to the spot market. If you want to trade on the futures market, be willing to follow the rules, which makes the futures market to be so easy and they're not complicated. Listen, the strategy Royal use is a smart trading concept. Hmm? And they apply what we call DCA. So with this is your stop loss in the market. Pay attention and listen to this. This is your stop. So with a whole trigger of $100 in the market. This is a smart trader with different portions of $10, $10, $10, $10, $10 at different portion. So now your stop loss has been evacuated out of the market. This means you and your money, you are gone too soon. Now, this is where the liquidity is located. Because the liquidity is located at this angle, now money will begin to flow in the market because all those stop loss have been teared out, and now money will begin to flow again. So if you've ever been a manual trader before, you realize that anytime your stop loss gets triggered, that is when you begin to realize that profit begins to flow in the market. Are we learning? 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 All right, let's proceed. Let's proceed. Let's proceed. Now, what we are saying is simple. So come here, let's go back to our board. What we are saying, for a trader to be secured in the market and make good profits, it is important for you to understand the concept of how smart traders trade to make profits by using liquidity to make profits, whilst retail traders exit out of stop loss. Huh? So what we are saying is that when you talk of the stop loss, this is a target where you think when it gets to that angle, you will be liquidated automatic. But when it comes to smart trading, first you will be given what you call liquidation price. That is the first thing. Second, you have your concepts here. Now, because the stop loss, because the retail trader used all the $100, now the stop loss get triggered and he's out of the market. The next thing is that after every stop loss, there is liquidity. After every stop loss, there is liquidity. So now that Royal Q got that opportunity, they said, no, you can apply Masango strategy, you can apply DCA in the market, you can open margin calls to make profit. So now you divide your capital into different sessions, go into the market in different badges. After being able to be buying the assets at different badges, you are creating liquidity, not a stop loss. So you get the opportunity to enjoy liquidity to make profits, while the retail trader or the manual trader goes into the market and run losses and go home. So at a point in time, whilst you are in the market, you are gaining profits from liquidities in the market. That is the ideal game. So now, whenever you create the margin calls, listen, anytime you create the margin calls, this is the reason why I've been telling you that the margin call that you open helps you to create new average price, because they create new there is always a new liquidity in the market. So the margin calls, anytime you open the margin calls, it helps you to create new average price. This simply means that anytime you have the margin calls open in the market, always you have the confidence because it creates new liquidation price for you. And whenever you create new liquidation price, it gives you the stamina to stay long in the market. It gives you the stamina to stay long in the what? In the market, right? So you have the confidence to stay long in the market. Do you understand what I'm saying? If you understand, give me one in the market in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Very good. So you see, using Royal Q, it's so fantabulous. You relax to trade as a trader, and you use all the strategies that are implemented in the market for you to make profit. Hmm? So this is very simple, that you don't need to confuse yourself with any other strategy, any and where is a stop loss. It's because you don't understand. Hmm? Look, using Royal Q is so amazing. You don't understand. That's the reason why I have to take time to teach you this. Hmm? Have you understood? Can you proceed now? Can you proceed? Can you proceed? Very good. All right. So let's proceed. Now, so you come to your trade, understand all the basic concepts in the market. So now you know how IPO works when it comes to the futures market by giving you a good liquidity whenever you open margin calls to trade. Now, the next thing that I want to talk about is about controlling. That is, whenever you use this, you are managing risk in the what in the market. Whenever you use this, you are managing risk in the market. The next thing that I'll talk about is the different modes that Royal Q uses. So we have the different margins, sorry, the different margins. So we have um isolated margin, and then also cross margin. So we have isolated margin and then cross margin. Now, when we talk of isolated margin, listen, whenever you set up a trade, you give it on isolated margin. One, it gives the trader the opportunity to focus on one asset, then manage his capital. So if you are using isolated margin, the work of an isolated margin is to ensure that one, you focus on only one asset at a time. So unlike the opposite of it, where you can be able to hedge, if you are using isolated margin, you can't hedge the trade. If you are using isolated margin, you can't hedge the trade. Then also this means if you are using $20, this will be the only money that will be exposed to the market unless you do manual buy. This will be the only money that will be exposed to the market. So if you have $1,000 or let's say $100, and then You use isolated margin, then with your first entry, which is $20, it's only $20 that will be able to expose to the market to trade. This means even if there happens that there is liquidation, there's going to be liquidation, it's only these $20 that will be affected. It's only these $20 that will be affected. That is the meaning of the isolated margin. So the isolated margin expose only your first buy amount to the market. Mm? The isolated margin expose only your first buy amount to the market unless you do manual buy in addition. Now, when it comes to the cross margin, the cross margin, one, it helps the trader to trade on hedge or to hedge the trade. So when you talk of hedge, that is the ability of a trader to trade the same assets on two different directions, on both long and then short. That is the meaning of hedge. So when you are using cross margin, you can use hedge trade or you can hedge your trade. The next thing to is that when you are using cross margin, now so whenever you are using cross margin, can you hear me? Whenever you are using cross margin, now let's assume you have $1,000 in the market. Anytime the market goes against you, part of this $1,000 will be added up to the capital that you are using. So just like opening margin calls, the $1,000 will be exposed, all of them will be added to your original money to trade. This means whenever there is liquidation, it's going to affect your total money in the market. It's going to affect your total money in the market. That is one thing too that you need to know. So if you are trading using cross margin, the cross margin will help you to hedge the trade. And at the same time too, it also help you to expose more capital in addition to your first buy amount. It also help you to expose more capital in addition to your first buy in amount. If you understand the two, give me one in the chat. If you understood, give me one in the chat. The difference between the cross margin and then the isolated. If you've understood, give me one in the chat. If you've understood, give me one in the chat. Give me one in the chat. Give me one in the chat. Okay. Someone is saying I don't. My brother, listen. Okay, now it's very simple. It's very simple. What we are saying is simple. Okay. What you are saying is very simple. Let me go over again. Let me go over again. Now, we said when we talk of isolated margin, pay attention. Pay attention. If I explain this and you don't understand, you need to go and drink more water and then you return back to the Zoom. Right. Now, we said isolated margin. When we talk of isolated margin, one, whenever you are trading on isolated margin, it gives you the opportunity to expose your first buying amount becomes the only common thing in the market. So this means that if you are trading using isolated margin, if you use $20, it's only $20 that becomes more functionable in the market. Hmm? So assuming you have $100 and you've exposed $20, it's only $20 that becomes more functionable in the market. And with isolated margin, you wouldn't be able to hedge the trade. So you can trade on that asset. If let's assume you are trading on Solana, you can only trade on Solana. You can't trade long and short at the same time on Solana. That is what you are trying to mean. Now, when I'm using cross margin, with cross margin, with this my $100, if I expose $20 and the market goes against me, it will still add up part of this $100, making let us say $30. When the market goes against all the $30, it will still add up, making $40. So it will continue to use all the $100, or it will use until all the $100 got exhausted in the market. This means that if it happens there is liquidation in the market, Since I've used all the $100 and my liquidation price is triggered, I'm going to get loss of all the $100, right? In the same manner too, whenever I'm using the hedge mode, sorry, whenever I'm using cross margin, I'm also able to hedge, or you'll be able to hedge your trade. And we said when we talk of the hedging is simple. That is the ability of the trader, okay, to open both long position and short positions at the same time on the same asset. At the same time, that is simultaneously. So you open both long and short position on the same asset at the same time. That is what we mean by hedge mode. So if you use cross margin, that is when you'll be able to hedge your trade. Now, if you've understood, if it's clear, give me one in the chat. If it's clear, give me one in the chat. If it's clear, give me one in the chat. So with isolated margin, it only focus on your first buy amount. The isolated margin focus on only your first buy amount. Unless otherwise you do manual buy. All right. If you have understood that, now we can proceed. If you understood that, now we can. So friends, before we proceed, me when it comes to the futures market, I've always seen that the futures market is very simple. But yet a lot of traders want to complicate the futures trading, especially my greedy brothers. Greedy brothers. Hmm? A lot of people are too greedy. Look, let me tell you, the futures market will make you profits. You make profit on the futures market. Hmm? You make profit on the futures market. But if you are greedy, the futures market is not for you. Listen, if you are greedy, the futures market is not for you. The last time I was there, someone came to my DM. Listen, me, when you come to my DM and you ask such questions, I won't mind you. When you come to my DM and you ask such questions, I won't mind you. Someone came to my DM asking, Brother Emmanuel, I was just looking at the charts. Something is worrying me. I don't understand. I was just looking at the charts. It seems whenever I use 5x, my profit is too small. Whenever I use 5x, my profit is too small. So, can you teach me how I can use 50x? I was just looking at the person. How can I use 50x? And I asked the person, how much is your capital? Said, my capital is $10. Hey, $10. You want to use $10? You want to use 50x for $10? Hey, blood of Jesus. Hey, $50. You want to use $50 for 10x? Sorry, 10x for $10 for 50x. Why? Why, my brother? Why? Why? Hmm? Why, my brother? Why? $10, you want to use 50x. You see, some of you are too greedy. Too greedy. Oh. Huh? It's not good. It's not good. And you see, that one is just the less of all. Someone just came asking, can you use $1 to trade on the futures market? I said, yes, it depends on the asset. It depends on the asset. Some assets can't give you that opportunity. He said, I want to use $1 to see if I can get $20 a day. I said, huh? You want to use $1 to be making $20 a day? Oh, I see. You see, people, whenever you want to give humanity freedom, people will always find a way to stress themselves to take away their own freedom. You want to use $1 to be making $10 every day. Hmm? You want to be using $1 to be making $10 every day. Which kind of attitude is that? You see, human beings, anytime you want to give people freedom, they will always want to find a way to take away their own freedom. Hmm? Look, let me tell you something. These futures markets will help you. These futures markets will help you. But if you think you are too smart, you are too greedy, then you sweat plasma. Huh? If you think you are too smart and too greedy, you sweat what? Plasma. Yes, you smell plasma. This is one thing that you need to know. Look, the way you trade on a sports market, you make your profits. When it comes to trading on a futures market, within a short period of time, do you know every profit that you make, if it's on a sports market, the profit that you make will be like times 10 on the profit that you make on the futures market with your capital. Hmm? It will be like times 10 of the profit that you make on the futures market. So why is it that you don't take your time to grow your account? Hmm? Why is it that you don't take your time to grow your account than to just chase? Look, you can't grow that way. Take your time, grow your money. It's for you. Very soon, if God permits, the Jesus is going to lead us to launch the 1% times 100 strategy. Hmm? Look, you don't need to just be. Why should you be greedy? Let me tell you, when it comes to trading on the futures market, listen, when it comes to trading on the futures market, if you really want to grow your money on the futures market, you need to follow instructions, you need to follow the lesson, you need to ensure that you avoid greediness. Huh? You need to ensure you avoid what? Greediness in the futures market. Look, the futures market would make you, but if you become too smart and stubborn, it can also unmake you. If you become too smart and stubborn, it can also do what? Unmake you. You don't need to stress yourself. Once you are making good profits, take your time and be making consistent profits. Hmm? Take your time and be making consistent profits. Why should you stress yourself thinking that a day you make $10, you make $5, you make based on your capital? Just go your way. Look, let me tell you, some of you sometimes it look as if you don't even know what you are looking for in the market. Look, sometimes you don't even know what you are looking for in the market. If you want to be a good trader, set a target for yourself. Don't set unrealistic targets. Your capital is $10. You've made 0.5, you've made $1, you've made $2. It's okay. Break. Every signal you trade, every signal you trade. Look, sometimes when you trade too much, even the market itself begin to hate you. Sometimes when you trade too much, the market itself begin to hate you. You become an enemy of the market because you don't want the market to relax and you don't want to relax yourself. At least take one signal, two signals a day. Make 2%, 3%, go your way. Are we learning? Are we learning? At least get a target for yourself. You make 1%, 2% a day. Go your way. Don't go into the market again. Every signal you want to trade. Huh? Every signal. Unless you don't see signal on the Telegram platform or on the WhatsApp platform. I'll trade. Ah. You see, we don't build wealth that way. Huh? That is not how we grow. You cannot be trading every signal. There are some of you, you see, a time I saw someone, I have to help someone to look at this account. Look, your capital is $50. You've set up about 7 trades in the why? 7 trades with $50. Look, my brother, let me tell you, you can't grow that way. You can't just use a day to make all the money in the market. You can't use a day to make all the money in the market. Why take your time and make consistent profits? Manage your capital. Huh? That will really help you. Because some of you are too greedy. Why use $50 to set up 7 different assets? $50. Why? Do you want to create a new country in your own way? You need money to create a new country. Huh? You need money to create a new country. Take your time. Risk management can only be done based on your capital. So if you want to apply proper risk management, control your money, get a good leverage. At least from 2x to 10x is okay. Hmm? From 2x to 10x. Before you consider going for 2x, 10x, check your capital first. Hmm? All right. Now let me answer some of the questions. Let me answer some of the questions. By 30 Ghana, maybe we have to bring this session to an end. So now, does that mean trading too much with the signal affect you? No, 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 that's not what we are saying. What we are saying is that you don't need to be trading too much. Know what you want. Listen, know what you want. At least you've traded two set signals a day. One signal has closed for you. You've made your 1% or 1.5%. The next signal, at least you've made 2% a day. It's okay. Hmm? What some people do is they want to trade all the signal that will be dropped on the platform. They want to trade all the signal that will be dropped on the what? On the platform, which is very dangerous. Meanwhile, your capital too is just something small. Sometimes you just check the person is $10 and he has divided the $10 into $2, $2, $2. He's using $10 to trade 5 different assets. Why? Huh? Why? Look, let me tell you, liquidation is real. So to prevent liquidation, understand the risk management on Royal. You use them and go scot-free. If God permits, our next session, there are a lot of people that they've traded on the futures market for the past 2-3 months and they've never experienced what we call liquidation. I'll let them come on board for them to share their experience with you. Huh? I'll let them come on board for them to share their experience with you. They've never seen what we call liquidation. This should tell you that if you can use Royal Kill for your own good, if you can listen to whatever we teach here, it will help you to grow. Huh? It will help you to grow your account. All right. Now, so the next person, please, I did everything according to the recording to set up futures account, but no coin is showing in my futures. No coin is showing in my futures. Then you have to check your API and set up everything again. You have to check your API and then set up everything again. So, coach, how do you trade in both directions for the same assets? So that is what we call the hedging. So I'm coming. Maybe I have to share my screen, but let me answer the questions first. Good. So I have managed to grow $50 to $3,000 with a better strategy in 8 weeks. Simple, right? So, guys, the futures market is working, and we are sticking to this, but with good skills. So that is the reason why Friday we are not going to sleep yet. We are going to wait for us to launch this 1% times 100 strategy for us to make good wins in the market. Huh? Very good. Now, if I do isolated, can I still do margin calls? Now, when you use isolated margin, like I said, only uses your first buy. It only uses your first buying amount. So since it's using your first buy amount, it simply means if you can open margin calls, you have to either add up or buy it manually as part of your margin. That is it. Someone is saying you keep jumping my question. What is your question? So please share the channel for future signals. Okay. So Chadwick, if you are here, please copy the Telegram link and then share it here. So if I do isolated, can I still do margin calls? So that is what I just answered. Hmm? That is what I just answered. So how do you determine your liquidation price? Okay, so let me share my screen. How do you determine your liquidation price? Okay, so I picked a trade yesterday, but mistakenly put it on cycle. So and coin trade 3 times, then later stop since yesterday. So just make sure that you are not liquidated if you have your money in your market. If it stopped when the trade or on futures trading, you can't stop the trade. So when it stopped, it simply means something has happened to your trade. Either check if you've not been liquidated, then activate it again or remove it from cycle. Okay, so please do not set up your trade on cycle. Do not set up your trade on cycle. So please, this is the Telegram link. Join the Telegram link. That's where you will be dropping the feature signals. Join it and then receive your signals. We said when you are using isolated margin, the isolated margin gives you the opportunity to expose your first buy amount. So once you've entered into the market, it does not add up any part of your capital again. This simply means that the margin calls add up to your capital. That is your first buy amount, your first entry. This means whenever you use isolated margin, for you to open margin calls, unless you do manual buy in addition, hmm, unless you do manual buy in addition, that is what we are saying. So let me see. Okay, let me see if there is any hand up. So there is no hand up. Now let me share my screen. So the person who requested for, I think my screen is shared. The person who requested for how to determine the liquidation price. So come here first. You can see your liquidation price on Royal Q. You can also see it on Binance. So let's check it out to see. Let's go to Royal Q. All right. Now let's click on strategy. Let's click on strategy. So over here on this particular trade, so let's click here. Now, when you come here, scroll down. When you come here, scroll down. So you are seeing what we call liquidation price. Hope you can see. Can you see the liquidation price? Hmm? So you have liquidation price of 0.3005. That is the liquidation price. And then we have take profit callback price. Hmm? So it says take profit triggered waiting for callback to sell. Okay, so we have the liquidation price. So this is your liquidation price of this particular trade, which is on short. So this particular trade is on short, and this is the liquidation price. Okay, this is the what? This is the liquidation price 0.3005. Hmm? So now, when you look at this particular trade, for instance, we have margin call trigger price or triggering price. Okay, so that is it. Now the current price of the average price was 0.1363. 0.1363. So with this, what we are saying is that since the asset is supposed to rise, this simply means that when this assets rise from 0.13 to zero point 0.3, that is when you'll be liquidated. So check the current price of the asset. When you check the current price is now 0.1363. Hope you can see 0.1363. That is the current price now. And then the liquidation price is what? Is 0.3005, which is very far different, about 0.2 difference or even more. Do you understand? So whenever you see your liquidation price, have the confidence and you know what is happening to your trade. Okay. All right. Now we said when we talk of the isolated margin and then the cross margin, the isolated margin focus on your first buy in amount. Okay. The isolated margin focus on your first buy in amount. And then also the cross margin uses all your capital. So in that case, in the case of the cross margin, it buys in barges. Like anytime the market goes against you, it will buy part of it again. Anytime the market goes against you, it will buy part of it again. And then with the cross margin too, you can also use what you call the hedging. You can also use what we call the hedging. Now, this is how the hedging works. So let me go back. So this particular trade. Now you see they said create long strategy. So you click on it. So it's already on short. So if I want to create long, I will just have to activate or click on trade settings, manually create. Everything is here already. So I just have to do what? Proceed, either use a different strategy. So let me see. Good. Now I have everything. So I can choose to increase the first buy amount. Let's say 300. That is going to give you $40. So after that, you click on what? Activate. Click on activate. You save and then activate. Now let's go back. Now you can see that this trade has also been activated. Can you see? This trade has been activated. We're already on short and now we've activated long position to in what? Can you see it? So I have to close the trade. Now, if you want to close the trade, you click on close, click on market, then 100%. Now, presently, it's on a take profit of negative 0.19. Okay, so I click on confirm, then I close it. So it has been closed. All right, you can see that we have our trade back here, right? So the hedging is very simple. The hedging is very simple. All right. Okay, so yeah, now. All right. So the next person, let me see the next question. Okay, so um, please, can one trade in futures markets with $20? If yes, please could. So yes, you can trade on a futures market with $20. You can trade on a futures market with $20. So okay, so now when it comes to the trade settings, please I urge you to join the 4:30 a.m. meeting that we've been doing. Now, listen, the is not exceptional. We are using the same strategy that we've been using. So when it comes to your margin calls, the strategy that we've been using on the spot markets, we are using the same strategy. Okay, we are using the same strategy. So how do you set margin calls? So please, the margin calls is just the same as the one that you've been doing on the sports trading. Mm? The margin call is just the same as what you've been doing on the spot trading. So for instance, let's come here. Um, let's get back to this trade. So let's assume I click on this trade set. Now this trade is already ongoing. So margin configuration. So 0.2. So 0.2 times the margin. It simply means that when this asset drops, um, so times 10, that is 2. So when there is a drop of 2, okay, when there is a drop of 2, the first call, when there is a drop of, it will buy. When there is a drop of 3, it will buy. When there is a drop of 4, it will buy. When there is a drop of 4, 5, in that order. So it's the same thing that whatever strategy that you've been using on the spot market, that is the same thing that you are going according to. So you are going according to the same thing. So now it has been able to buy 4 margin calls. Okay. It has been able to buy 4 margin calls. All right. Okay. So now let me take your next question. Okay. So can you explain the difference between? Okay, that's what I just did. So does that mean if I do hedging, I can switch the position using the same capital, or I should have my brother? You don't need the same capital. If you are opening margin calls, are you going to use the same capital? So in the same manner, too, if you are using hedging, you are not going. So if you are using $20, you can choose to use $20 to on the opposite. Do you get it? So it's going to be different capital. So I tried placing a trade and I was told there is a ratio issue. What does it mean? Yes, so when they tell you Field leverage ratio, it simply means that your API, your trades futures trade setup is not successful. So you have to go back and then check your API again, redo the API. So where's the Telegram link? Chadwick, please post the Telegram link again. How about the use of AI margin calls is it necessary? Yes, it depends. So you know that the work of AI margin calls is to help you buy the asset, and then also, so if you don't want to use, or when you're using the AI margin calls, it will help you to be buying the assets, that is your margin call. So you can choose to turn it off, or if you want to control the rate at which you will be buying it unnecessarily, you can choose to turn it off. So it depends on you. So I didn't get how to calculate the liquidation price well. Can you elaborate on that? All right. Now we didn't look at how to calculate the liquidation price. I only explain or expose the liquidation price to you. Now, if you want to calculate for the liquidation price, I think I have to make that lesson Friday. I have to make that lesson Friday. How to do the calculation. There are other calculations that involve that we need to check it out. Yes, you can also set up trade on spot. So please, the liquidation price, when you set up the trade, you will see it. When you set up the trade, okay. So when you come here, hmm, when you come here, this is your trade. So you click on it. Where is that? Okay. This is your liquidation price. Hmm? This is your liquidation price. That is 0.3162. That is your liquidation price. Okay. That is your liquidation price. So you can see it here. The liquidation price. 0.3162. That is your liquidation price. And then you will also see take profit triggering price. The price at which your profit will be triggered. That is 0.1334. So anytime the asset drops to 0.1334, at least I think that one is based on the margin calls, right? So that is it. That is it. Now, let me see if there is any other question to ask. Okay, very good. So this is Crypto Ambassadors Telegram signals. Please, you can join. So, so can you guess what could happen while everything in the futures back after the 3 time cycle trade? Well, hold on. Please, maybe unless you share your screen, but hold on, wait. Okay. So what is risk in hedging? Now, when you hedge a trade, you are just ensuring that you make profits whilst the other position is going against you. So in the case of hedging, you are only risking the other part of the market to make profits on the opposite. So if you are long, you are just risking the short to make profits, right? That is it. Okay, let me see if there is any hand up. Okay, so Zara and then also Chucks. So Zara, you've been asked to unmute, ask your question.
Good morning, coach, and
Good
all
morning.
traders. My question is, what I understood, or is it correct that if I decide to choose cross margin, that means that if I trade like I short the market and it goes against me, I can change and I long it, right? In the same
All right.
coin. Am
Okay.
I correct?
So let me explain to you. So we said when you set up or when you have the cross margin, you can also use the opportunity to hedge a trade. When you talk of the hedging, that doesn't mean that you are closing the other trade, but then it simply means you are on long and you are shorting the same asset again. Do you get it? So whilst you are longing the asset and the market is going against you, you can choose to short that asset. Since there is opportunity, that is, if there is opportunity for you to short it, because sometimes the market goes against you sharply and then it reverses back again. So if you realize that now there is an opportunity for me to, since the asset is dropping or it is rising against my trade, you choose to short it. That is when you have the cross margin. Do you understand?
All right. Thank you, coach.
All right, you're
Understood.
welcome. Okay. All right. So, Tax, you have been asked to unmute. Ask your question. Can you hear me, Tax? Okay. All right. Ask your question.
Hello, coach. Should I go ahead with my coach?
Yeah,
Hello, coach. Hello,
go
coach.
ahead.
Good morning. Good morning.
Good morning.
Yeah. I actually got your explanation pertaining to the difference between isolated margin and cross margin. Now, from what you explained, isolated margin, one will not be able to open margin calls when one is on isolated margin, right?
Sure.
Opening margin calls can only be possible if one is on cross margin. My
Exactly.
question is this now: when one is on cross margin and the first buy amount has been in the market and margin calls are open. Margin calls are opened by the trader and they are going. Now, the margin calls that are opened will be taking money only from the money that is on the futures account, right?
Exactly.
Okay, fine. Now, and another question I want to, another thing I want you to help me with is that I tried I have been following up your features lectures, and I watched the videos as well. And I tried to set up my features account, and I was going on, everything was going, but on my API management, when the day you did it with us, you have to open it up, then um, features, enable features on those options listed. But on my own, enable features is not there. How can I get that issue resolved? It's not showing enable features on my
Uh,
Binance
All right. So if you don't have enable features, which country are you located?
in Nigeria.
All right.
Nigeria.
So if you don't have enable features, first thing that you have to do is to set up a futures account. It simply means you've never traded on a futures market before, and you need to open a
Yes.
futures account. And once you are done opening a futures account, that is when you can see enable futures on your um, API. Okay.
Okay.
So you
Okay.
have
Opening feature. Sorry. Excuse me. Opening features account is different from setting up features account,
anyway, it
right?
may be the same.
Hello,
You
coach.
have to set up first. First, you have to set up your futures account. So before you go to the API, you first need to go to the futures
Okay.
and then activate all those setups. Before that is when you have
Okay.
advanced option where you tell the market that you're an advanced trader so that they can, or experienced trader.
Oh,
Yes. So
okay,
that you access the market
okay,
the futures account for you. So go and do that first. All right. Okay.
okay, okay. All right.
Let the
Thank
person.
you very much.
You're welcome. Okay, so um so Frank, you've been asked to ask your question. All right, so Frank, your hand is up and you can ask your question. Sorry. Okay. You can proceed to ask your question now.
Please, can you hear me?
We can hear you.
Hello.
Hello, we can hear you.
Okay. Good morning, and thank you very much for the lessons. Mine is not actually a question, but it's a plea. Um, in your subsequent previous lessons, I realized that when you share your screen and you are showing us something, um, sorry, you say, come here, click here. I don't see if you can help us with maybe a pointer to show us that, because sometimes you say, come here, and then before you realize that a dialog box is open and you may not know where exactly you clicked or where you
Uh,
pressed. So if you can help us with maybe a pointer or circle where you have to click before a dialog box opens, or maybe
all
a
right.
pointer to show us click here, because sometimes it gets me confused. But
All right.
but in a whole, you are fantastic, and God bless you.
All
Um,
right.
I'm from Ghana,
Okay.
Kofodia.
All right. That is good. Thank you.
Thank you. Thank you.
All right. So the next person, Michelle, or okay. So let me. You've been asked on mute. Ask your question.
Thank you, Coach. Good morning for a wonderful job. Good morning, all the leaders. Coach, I was the one sending the pictures that if I can, you can help me to share my screen. If I can share my screen for you to see what happened. Yesterday, I just tried to practice my knowledge with what I have learned from the future, and
Okay.
I picked a trade, but mistakenly leave it on the cycle, and it traded 3 times and it made profit for me. Then after then everything stopped. Even I can't the coins on the futures is not showing like it's trading according if you see the picture I sent to you. I can't access, I can't everything was just stopped, but it's working on spot perfectly. On the strategy, the coin is not showing that it's trading, but it's just there. And in the Binance, it's still trading, but it's on minus, but no problem. But I want to know what could have been the challenges if I can share my screen so that you can see clearly what I'm talking about. Thank you.
All right. Which country are you located in the first place?
I'm in Nigeria, Lagos.
Okay. All right. Share your screen.
Okay, thank you. He said only the host can share in this meeting.
Okay. So I'm coming. A minute. Hmm. Okay. So you can share your screen now.
Okay, okay.
Are you sharing?
Yeah, I'm
Okay,
starting to. Yeah, can you see my screen now?
you can see.
Okay, good. It's loading. As you can see, everything on my spot is working. Now on the I click on the future. This is it. Nothing is stopped immediately when the coin picked 3 times. This is the coin there I
Yes.
was
So
trading.
that's the reason why I asked which country are you located. So this is the trade, right?
I am in Nigeria.
Yeah. So this is the trade, right?
Yes, this is the trade.
Okay. Okay. So now you are already in profit, but what's the complaint about? You said you can't see anything.
I can't the it's not showing the current average price. And if I come here, look at this place, nothing is showing here. Look at everything is 0.00, and even unrealized profit and loss is also 00. But here is showing because I entered with $10. This is it. Here is the liquidation price. It's not yet liquidated. This is the
Yes.
average
No.
trigger price.
Hold on. There is nothing. The problem is not from Royal Kill. I think it's from your. So that's the reason I asked the country you are located. It seems most people from Nigeria are facing the same challenge. So if there are any Nigerians here, yesterday they helped. I think most of them were discussing of if possible using is it VPN. So please, I think that would be the best solution. It is not from
Yeah.
Royal Kill. Do you understand
Ah,
what I'm saying? Yes. So
okay.
it's not something that have you understood?
You are advising that I should be using VPN to trade on futures.
And you're right. If you want to see the things, if you want to see the figures, everything there clear, I think the best thing to do is to the best thing to do is to do what is to do that. So the
Okay.
Nigerians would, I think the Nigerians advised that you use VPN. Yesterday in the meeting we discussed about that. So that is one thing that you need to take notice of. It's not from Royal Q, but it's from your trade. Notwithstanding, you can choose to sell your trade if you're okay with the profit. You can choose to sell it.
Where do I sell it? Because can I show you on Binance? When I saw it on
You-
Binance,
Not on Binance. Hold on.
okay,
So go back to Royal Q. Click on close.
I did it. Okay,
Then click on
I'm
market. So click
trading.
on 100%.
It's not taking.
Mm.
100% is not taking. I did it yesterday. Tried to close it, but same
Yeah,
thing
so
I
I think the
experienced.
best thing that you can do, you have to use VPN first to get access to everything before you can do that. Okay. So work on that. Then later, maybe later in the day, you can chat any of the leaders or you can chat me for me to assist you.
Okay,
All
all right.
right.
Thank you. I'll try that. Thank you.
You're welcome. All right. So guys, um, I think that is all. Let me see if there are any other questions in the answer.
But coach, can I ask you something? Coach, but
I'm listening.
yes, coach, I have traded on future markets with Binance manually. Both time I make profits, both time I sometimes I make losses. And I didn't use VPN. What
You
could
know,
have been why now
present.
that I have to
Can you hear me?
because yes, I can hear you. I can hear you, coach.
Presently, Nigerians are facing regulations issue with Binance itself. Presently, hmm? That is the reason why most of these are becoming challenged. Presently, Nigerians are facing regulations issue with Binance. So, don't be surprised it's happening. So, hmm?
Okay. Oh,
Yeah,
no, I will check it. All right, thank you. I take notice
yeah.
from that.
But you also
Okay.
need to be careful. So, I have to after the meeting, you can chat me.
I didn't have your number, boss. I didn't have your number, coach.
All right, so maybe I'll see what to do to get. I'm sure you're on Crypto Ambassadors platform, right? So I'll
Yes,
I'll set you
yes,
out.
I'm there.
All right, all right. I'll set you out.
Okay.
Okay. All right. So guys, let me see. Okay, the last person I can see one Emmanuel. So what time do you do? Do you have the features class? So every Wednesday morning and then also Friday evening. Wednesday morning, 9 o'clock East African time, 7 o'clock Ghana time, and then also 8 o'clock. Is it? Yes, 8 o'clock Nigerian time. So take notice of that. How do I close my trade? I think I just did that not long ago. Mm, I did it not long ago. Okay, so someone, people from Nigeria should VPN on Play Store. Okay, now there is one last person. I can see some hands up again. So I'm going to take one more person in addition. So Emmanuel
Yes, sir.
Mesegan.
Thank you, sir. Yes, sir. Thank you, my coach, for all your efforts to take us to the level of understanding. I have a challenge with my futures account. If I want to enter a trade, it's not showing quantity.
Pardon?
If I want to enter a trade in my futures account, it's not showing quantity. I don't know whether I can share the screen for you to see.
But we're able to set up everything accurately, right?
Yes, sir.
Which country are you located?
Nigeria.
So I guess it may also be the same problem. You see, problems like this are not problem from Royal Q. They are general problems based on some certain regulations in Nigeria. It seems most people in Nigeria are facing the same challenge. So just
My
like the
own
other
issue,
colleague,
since I opened the account, I've not been able to take any trade because if I click the coin, it's not bringing out the quantity so as to know the value of dollars or what to put in.
so with that, share your screen and let me see.
Okay, thank you, sir.
So those of you facing such challenges, especially those in Nigeria, that is a common problem. Okay,
Please
that is a
permit me
common problem.
to make my co-share so that I can show my screen.
All right. Okay, so you can proceed to share now.
Okay, sir. Can you see my screen?
I can see.
Okay.
But you've
Let's say I
already
want to
stopped.
pick, let's say I want to pick a coin, maybe ALT.
Yes, so I think that is the same problem we are talking about here.
But my own is not even showing any quantity.
Yes, that is what we are talking about. So just like your other colleague, we said that is a exact problem. So it's a common problem that runs through, since most of the people in Nigeria, that is a common problem now. So
Please, how can you help me out?
the easiest solution to that is what we've said. It's either, if possible, you have to use VPN.
I
So
have it.
we'll are you are you on the platform? You educate you guys on
Yes,
that. How, especially those in Nigeria, will educate on that, how you can
I have it.
use make.
I have VPN. I have VPN already.
Okay, so is that what you are using now?
Let me switch it on, but it doesn't make a difference.
All right, so that's what I'm saying. We have to check it out, since we've seen that it's a common problem running through Nigerians. we will find a possible solution for that. But it's not a problem in Royal Kill. That is what I want everyone to know. It's not a problem in Royal Kill. Okay, so we would have to find ways that you guys too can get solution to that, right?
Please, can you give me the audience to take this up with you later at your convenience?
I will chat the group. So since you are on Crypto Ambassadors, I'm also on Crypto Ambassadors platform. We are all Crypto Ambassadors leaders. So we'll how to go by that on a platform in the course of the day. All
Okay,
right.
sir. Thank you.
You're welcome. Okay, so guys, let me see. There is one more hand up. Chucks, is your hand up or is by mistake? Because you just asked a question not long ago. So I think, guys, let me see if there are any questions in the group. But Coach, hope it's not going to affect our Binance account. No, this is not something that is going to affect your Binance account. So, but then in the course of the day, we would address that issue, how you can go by that. You will find possible solution to that. So please, we urge you exercise patience for that, especially those in Nigeria that are facing such challenges. We would find a way that we can sort out or bring a solution, a possible solution. But notwithstanding, what I want you to know is that it's not a problem in Royal Kill, neither from the exchange. It's something that has to do with the Nigerian regulation issue. So take your time. We will bring more solutions on how to go by that. All right. So I think there is no question again. Let me see if there is any other hand up. Chuck, do you have any question to ask? Chuck, you've been asked on mute. If you have any,
Yes.
okay.
Yes. Yeah, thank you very much for the opportunity. You are wonderful. I really have a very big challenge that I want to share with you privately. I don't know if you can grant me. I'm pleading.
All right.
I'm
That is not a.
pleading very.
I'm not going to drop my number here, so I will urge that since you are on Crypto Ambassadors, when I get to
Yeah.
Crypto Ambassador I will comment there so that if you want any assistance, you can chat me privately.
All right.
All right.
Thank you very much. I really appreciate it.
All right. So guys, I think that is all. There are no other questions to ask. We are going to drop signals. Signals are already dropped on the Telegram platform, and we are going to drop more on the Telegram platform. We are going to do more tradings today. But then my advice to you is that don't overtrade. Don't overtrade. Don't be greedy. Follow the alignments, follow the trading alignments, the instructions, and then also make good profits and go your way. If your target is to make 2%, make that 2% and go your way. Don't force trades. Don't trade plenty. If you get at least 2-3 trades done, that is all. Wait for the next day and get your results and go your way. That is all what I have to share with you this morning. If God permits, Friday, we are still going to meet again and then have more discussion on the futures market. I wish you all the best in your trading journey and I wish you good as well. So have a good day.